And I'm back. Not live, but not edited. We have Pfizer, PFE, New York Stock Exchange, 10-year chart, monthly candles. And the more I'm practicing with 10-year charts and monthly candles, the more I'm observing the advantages and disadvantages of doing it compared to other time frames, weekly, daily, and the other smaller family members. And eventually I'll do a podcast on outlining those differences, and so you have a better understanding of the differences and what each time frame brings to you, to your arsenal, to maximize your probabilities of reaching those possible targets that classical chart patterns or bring you, those implied measure moves, right? Height to bottom, added to breakout lines, breakdown lines, and henceforth. All right, meanwhile, I've identified the resistance at 37, 2 years. And here's a support around the 29.50 line. See right here, that candle, that's noise. And if I go on the weekly, let's go look on the weekly, and this could have been see a false breakout. You'd have you could have drawn your lines here, then you would have thought this was a breakout. Came back down. Even you could have maybe somebody on the 1 year daily, this could have been a breakout here. Let's go see on the daily. Yeah, somebody playing on the daily back here in December. You would have had his resistance here. You would have had his support here. You would have had a breakout line. You would have had a measured move, top to bottom, right here. You would have had that here, and that would have never been reached. You would have just reverted and came back down. Because right here on the 1 year daily, what you don't see is that $37 level is important resistance. But if you have just 1 year of data, you have no way of knowing it. Just no way. You'd think sky's the limit. There's no oh man, I'm trying to draw an arrow. There's no resistance, and you're just high flying. Well, guess again, I know further resistance is less valuable, but those monthly candles somewhat compensate for that fact that they're far back. There's a lot of weight to monthly candle closes. A lot. So that is to consider. So right now you would have thought that you were here, but you would not see this data. It's not even that far back. It's just over a year there. You see it. It's in July 2016, so a year and a half. So be careful with that. Start with the biggest time frame, and if you're with the trend and there's a break on that level, then drill down to the weekly and daily and see if the trends and there's simultaneous breakouts around those levels. Because the breakout level on a monthly chart will not be the same as on the weekly and in daily. Could be, but most of the time not, because of those wicks, right? Those wicks, when they pop out, well, this is data on the weekly and on the daily, which could have signified a breakout, like we saw when I was on the 5 year chart. So by nature, the close of the candles where I identify my resistance will be lower. So right now, see, okay, let's because my mind's a little bit over the place, but I just want to run through that. Here we have the monthly resistance identified at the 37 level. But somebody playing right now on the 5-year weekly, right now he has some resistance here. So for the next moves, eventually, his resistance will be here. But on the monthly chart, this is never seen as important resistance. It's the close that matters. So you have wider ranges on the weekly for your patterns from top to bottom. Right here, you see, if let's say, see on the weekly, it's even lower. So the range eventually is just, if you go from top to bottom, the range is just a little different on the weekly. I've observed that it's usually wider. And on the 1 year, it's, well, what I need is 5 years of data, daily candles. And on the daily, same thing. So right now, the daily, you see, it's even further down what the daily sees as support and as resistance. Well, now it coincided, so it's not. It's the same. So you got to be careful of that between when you play within time frames. I always like to protect myself by being on the good side of the monthly 10-year candle, and after that, I know I have the win in my cells for whatever trade I want to do. All right, so that's me going off track for Pfizer, covering a little bit of those differences between monthly candles and other time frames, the subtle differences. Not sure if that's an English word. And all right, so right now, what I would do for Pfizer, I would just set my alert here on the 37 level, since price action is under, and I know that's my breakout line. And for the bearish scenario, eventually, if we come down to it, maybe the 32.65 level seems to be maybe some resistance, some support here eventually. Right here. All right, going down all the way here. All right, so for Pfizer, nothing to do yet. Closing in on that breakout line. And if it doesn't make it, then we're going to go down. So RSI right here is neutral or skewed down. Price action from that top here. Oh, don't want to do that. Oh, I'm grabbing. And price action is there's some bearish divergence with the RSI. Lower highs and slightly higher highs, or maybe I'm just cheating here. Even highs. All right, okay. Right there, let's call that a push. No signal there. Let's just come back for Pfizer a little later on and see if this can be a pop-up. It seems to be like an ascending triangle. See if it's going to pop up to the top over this resistance line, or it's going to come back down, have a few more candles, and now it won't be an ascending channel, an ascending triangle. It could be if there's bars that come here, we'll just have a good old-fashioned rectangle. All right, let's let this thing sit in the oven for a little while and come back to it when it's ready to pop or break down. All right, I've talked enough. Ciao.